Have you ever heard investors talk about options and felt like they were speaking a different language? Well, today, we're going to demystify options trading and show you that it's more straightforward than you might think. Think of an option as a special coupon or reservation. It gives you the right, but not the obligation, to buy or sell something like a stock at a set price for a certain amount of time. You're essentially paying a small fee for the option to make a move later. We have two main types: call options, which are a bet that a stock's price will go up, and put options, which are a bet that it will go down. To trade options effectively, you need to understand a few key terms. First is the strike price. This is the locked-in price at which you can buy or sell the stock. Next, we have the expiration date, which is the date your coupon expires. If you don't use your option by this date, it becomes worthless. Finally, there's the premium. This is the cost of the option contract itself, the fee you pay for the right to buy or sell later. Understanding these three concepts is the foundation of every single options trade you'll ever make. Now, let's look at two basic strategies perfect for beginners. The first is buying a call option. Imagine you believe a tech company's stock, currently at $100, is about to soar. You could buy a call option with a strike price of $105. If the stock price jumps to $120, you can exercise your option to buy it at the lower strike price, securing an instant profit. The second strategy is buying a put option. If you think that same stock is going to fall, you could buy a put. This gives you the right to sell it at a higher predetermined price, even if the market price has plummeted. Of course, with great potential rewards come significant risks. The biggest reward of options trading is leverage. A small investment can control a much larger amount of stock, leading to amplified profits. However, the biggest risk is that you could lose your entire investment, the premium you paid for the option. If your prediction about the stock's direction is wrong, or if it doesn't move enough before the expiration date, your option will expire worthless. That's why starting small, learning continuously, and having a solid risk management plan are absolutely crucial for anyone looking to step into the world of options trading.